Today we declined again on the S&P 500, which is now the fourth day in a row that we've fallen to the downside. Generally speaking, that is pretty bearish and can lead to more bearishness. So we're going to talk in today's video about the prospects of us starting this highly anticipated intermediate decline, 5% pullback, whatever you want to call it, whatever the media, I think the media likes to call it a correction. Though that's, again, corrections is when you break the 200-day moving average, and we're not going to be breaking that anytime soon. But are we in the initial stages of that, again, widely anticipated intermediate decline? We talked about in our class today at Market Scholars the idea of multiple intermediate declines that generally occur within 6 to 9 months after a correction. We're 4 months since the low point of our last correction, where we did actually trade below the 200-day moving average in April, coming off that April low. How likely are we to get that now? So we're going to talk about that and see whether this is it or whether or not we're going to, this is actually a pretty good buying opportunity. So we'll break down kind of what we're seeing from both sides. There are a couple red flags I brought up before, and I'll show you again. And there are some signs that are kind of creeping in today, like some interesting signs that developed today that would point us in one direction or the other. So I'm going to break that down. We did have an interesting move in commodities today. We'll break that down as well as other intermarket relationships. The sector rotation has been clearly one-sided. And so we've had some, the Mag 7 names have been clearly leading the decline. But are they breaking down themselves? So we're going to look at that from a sector rotation standpoint, and then our trade idea, as always, outside of the Mag 7 space, those three sectors: technology, discretionary, communication services, and for a bullish pattern. So we'll break that down. So let's go ahead and get started. Today is Wednesday, August the 20th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. All right, well, let's go ahead and get started and take a look at the S&P 500 with the market forecast indicator. As you can see, we continue down today, only down 0.25%, well off the lows, but 4 days in a row now to the downside. But the move off the lows really helped the short-term sentiment pattern. So if you look at when we were at the lows, let's correct this bar, and I'm going to change the close to be the low of the day here. There we go. So at the lows of the day, things were not looking good at all, right? We had the intermediate line was below 80. We had a bull tag. We had short-term sentiment about as bearish as you can be. That did not look good whatsoever. And with the crossover below market sentiment, again, just barely below, and we would have been just barely below the moving average, but still a bull tag with that bearish of a short-term sentiment. As you can see, we haven't been that bearish on short-term sentiment since, again, back over here when we were starting a new bearish intermediate decline. So that would have been pretty bad had we held the lows, or even had we retested the lows by the end of the day. But we didn't. We came off the lows, we came off that pattern, and now to the point where the near-term line's up, the momentum line's up above it. And if we bounce off of this tomorrow, we're set up for a pretty good near-term bounce, right? Because again, what we're looking for is the near-term line to bounce when it crosses 40. Ideally, you want it to cross either 50 or 62, right? That's the ideal scenario. And then on the day that the near-term line crosses 40, you want the momentum line to be above it, if not above 80. That would be the most ideal, or even above 90 even. So obviously that's not the case right now, but it's set up for that. Like we are much better set up for that now than we have been the last couple of days. Remember, we got that intermediate confirmation signal yesterday we talked about, and we didn't bounce off of that today, but it looks, because we're only down 0.25%, but now it looks like we have a chance to bounce off of that going into the end of the week here tomorrow and Friday. So I really like the short-term pattern. The NASDAQ didn't quite do that. It ended up with a bull tag. We did finish the day slightly below about as slight as you can be, 0.08 of a percentage point down here. So we ended up below the 30 days. So we got the bull tag, light pink shading. The intermediate line's well below 80, below this market sentiment. But again, instead of being extreme on the short term, right? So at the lows of the day again, let me bring this over. 2295970 at the lows of the day. Let's try this again. All right, so I had to use QQQ, and it's going to be very temporary here. But if you look, when I apply this, if you look at the patterns, very, very bearish. Short-term sentiment, very significant. We were down way below let's try this again, way below the moving average. You can see how bearish that short-term sentiment was. You might have to hit the pause button on your screen here. You can see we were well below the moving average. Well, no, it doesn't show me down there, but well below the moving average there. I mean, it was significant. But again, coming off the lows, we get a bull tag. We're not very far below, and we have an opportunity to bounce. Like the short-term sentiment looks like it's bouncing. The momentum line did bounce from this bullish intermediate confirmation signal. So it's actually looking pretty good. Let's go to the Dow Jones Industrial Average, which, remember, did not get the bullish intermediate confirmation signal, or did get it, excuse me, didn't get the near-term line down there, and it was actually a couple of days ago we got that signal. We're still above it. We're actually up. The Dow was up today. The intermediate line still in bullish territory, still above market sentiment. The near-term line set up for a bounce out of bearish territory with the momentum line already above it. And then finally, your Russell 2000 has a weak bearish posture, did not finish below the moving average, so no bull tag like the S&P. The near-term line's in bearish territory, but not oversold, and your momentum line's already crossed above it. So again, it's also set up. So, yeah, it's been a little bit of a decline. It's, I know it's been a nothing burger from a technical standpoint, especially when you look at, the daily price moves here. You can see that is hardly a bearish move when you compare to what an intermediate decline actually looks like. So this is hardly any kind of weakness. You can see it's very similar to weakness you get when you're bullish, like you see over here on the left. So despite what you might hear on TV or from the media about how bearish things have been the last few days, it hasn't been that bad. So now I'm going to kind of break down my expectations here going into the end of the week with what all the other charts are showing us. To either confirm what we're seeing here in terms of the prospects for a short term, or are there some red flags that would suggest otherwise? So that's kind of what I'm going to start to break down next in the rest of our video. All right, well, that does it for our Market Outlook preview video. If you want to watch the rest of the video, that's available at marketscholars.com for all of our subscribers. There's a link down in the description below or the pinned comment, either one. That will take you to our blog post where you can unlock that with a subscription to Market Scholars. All of our subscribers get access to it, including our foundation tier, which is only $29 a month or $299 a year if you want 2 months for free if you do the annual version. But with that, you get access to the whole Market Outlook video every day. You get access to the trade idea in the Market Outlook video that we do at the end every day. You get access to the Market Outlook live video where we take a look at all the trades and manage them every day at 3:30 Eastern time. We also put on the day's trade before the market closes. And then finally get access to our Market Outlook live trade tracker where we track the results of all these trades throughout the year. So again, $29 a month for that, and the link is down in the description below. Thank you for watching. Remember to subscribe to that YouTube channel, hit that like button down below, share it. Ring that bell so you're notified when these videos are posted. Follow me on Twitter for more content between the videos, as well as Facebook, LinkedIn, other social media channels. Have a great rest of your night, everybody, and we'll see you all tomorrow.